Hi, welcome to this special live edition of Ilanomics. We apologize for this slight delay in starting the show because we were just encountering some technical problems and we had to fix those problems. And before we also And before we start this show, I would first of all want to thank all our viewers and readers who have subscribed to The Print. What a difficult economic situation the country is going through and how difficult it is for the media, like so many other businesses, to operate in this situation. And we need people to pay for what they read and what they view on our platform. So if you have not taken a subscription to theprint.in, I request you please do visit theprint.in and subscribe. There are sections separately for domestic subscribers and international subscribers, and you will really join a growing breed of readers and viewers who are contributing to the growth of the print. So we look forward to many more of you taking those subscriptions. So today's Ilanomics is a special live edition, as I told you earlier, because the Monetary Policy Committee of the RBI had its meeting yesterday and day before, and Governor Shaktikanta Das today announced the outcome of those deliberations. Remember, this time we had a new committee in the sense that there were 3 new independent members on the MPC. Not surprisingly, the governor, the MPC left, interest rates unchanged, but they also talked about more policy easing and that the bank would maintain an accommodative policy stance to support growth. Uh, but the governor also said the Indian economy is entering what he said was a decisive phase in the fight against coronavirus. He said silver linings are visible. Economic activity is beginning to gain traction in the third quarter of the year, and the GDP will actually enter positive zone in the fourth quarter. That is 0.5% growth is what the RBI has forecast. And that the modest recovery in the first half will strengthen in the second half. Welcome, Ila. You heard the governor like we all did. Do you think this is a reasonable, realistic assessment of the economic situation?
Yes, YP, I think it's pretty much along expected lines and quite realistic because the slowdown that we saw, rather the contraction that we saw, was mainly because of the lockdown that was imposed. And since the lockdown has been eased, people have been able to go back to work, businesses have restarted. Of course, there remain constraints. There remain constraints both on the ability of businesses to bounce back, as well as, many of the people intensive businesses where people are still afraid of the virus. So things are not back as much as they could have been. But, that extreme lockdown that we saw in March and April, that is over. And so the economy has started creeping back to normal. So pretty much along expected lines. And I think also the decision of the MPC, which was to keep rates unchanged, was also along expected lines. Not only is it that the previous rate cuts have not yet gotten transmitted onto lending and bank credit rates, but also because inflation is still a little higher. The MPC members are new, 3 external members are new, and one would expect them to be a little cautious in the beginning. Though, of course, I'm pretty sure that even if it was the old MPC that had continued, the old 3 external members had, let's say, got an extension or something, it would not have been very different. I think the decision would still have been the same.
Ila, one of the things the governor said, in the morning was that focus must shift from containing the virus to reviving the economy. I thought that had already started. How do you read that statement?
No, I think that there has been concern, and he's voicing that concern that initially, when we did a lockdown, we were not very clear about, whether we can contain the virus at all. And now that it seems that yes, the virus can be contained, I mean, we've had 100,000 deaths in India, but it's not 100,000 per day, as sometimes right in the very, very early days, as had been feared. And so the focus by now can move to how to revive the economy, whereas now it was on how to prevent the virus from spreading and reduce the death rates, give people medication and oxygen that they need. I think today there is more confidence that we know what to do and how to control it. Not to say that that battle has been won, certainly not. But in terms of making plans and what to do, I think there the question is of implementing something that one kind of knows what has to be done. Whereas in terms of reviving the economy, perhaps we're at a stage where we're not sure of how it is to be done. Simply removing the lockdown may not revive the economy.
The other key point the governor made, Ila, was on inflation, which is something we have also talked about, you have written about in the last few weeks. He said inflation is likely to ease by the fourth quarter, and the current inflation hump is transient.
Yeah. See, part of where you're getting higher inflation from is food products. It's also that the index is higher in rural areas. So if you look at the prices of eggs, meat, vegetables, to some extent cereals, these are higher now than these are growing faster. They're more expensive than one would have expected, and this would be eased with the crop. This would be eased with supply constraints going away, and that's why the present inflation is supposed to be due to the supply constraints that came with the lockdown. And therefore, as the lockdown goes away, the supply constraints will ease, and that inflation, which is transient, will go away. So that's, I think we've talked about it in earlier episodes also, where we've said that yes, we are seeing higher inflation, but the kind of inflation we are seeing is not a general demand-driven inflation, which is normally addressed by hiking interest rates. So, this what is the nature of inflation is very much linked to how you try to address it and solve it. And in this case, the nature of inflation is transient, is food price driven, is supply constraint driven, and not so much due to overheating of the economy or demand conditions at all.
Ila, we've got some viewers asking us questions. Since this is a live edition, we take questions from our viewers. There is Tarush, who's asked, Tarush Kakkar, I think he's asked us questions through Twitter. And he has two questions. The first question is, should the RBI intervene in financial markets and let the rupee devalue because a strong rupee is hurting our exports?
You see, if you look at the RBI's intervention, the intervention has not been to so-called, as you say, let the rupee devalue. In fact, the intervention has been to prevent an appreciation of the rupee and to let it get stronger. So if it were to not intervene, that is when we might see a little bit of appreciation. So I'm just correcting the question first, and then I'll go to addressing it. Now, in terms of whether the RBI can intervene to push the rupee down and to devalue it, that might be hard because one, you would become a currency manipulator. And today, that after what China did for a number of years, that's not something that goes down very well. It also has its own complications, which is that you would want to sell rupees in the market, you'll buy up dollars, and that has monetary consequences. So I would say at the moment, the best policy might be to maybe lay off a little from the market. Yes, they do intervene when the rupee starts getting too strong or when there's a lot of volatility of the exchange rate. But to try to push the currency in any one direction is usually a losing battle.
Because during the beginning of the lockdown and the pandemic, and the rupee fell to, I think, almost 76 to the dollar. There was a lot of talk. There were some experts forecasting that it will touch 80. But on the contrary, it has actually recovered to below 75. It's in the 74 something zone. So actually, those forecasts have not come true.
Yeah, absolutely, they haven't come true. And it's very dangerous when you start manipulating the currency.
Mm-hmm.
If you're clear that, had we been clear that the rupee is actually going to depreciate, and then we had prevented depreciation, the depreciation, let's say it was happening due to fundamental factors, let's say because our inflation rate was higher, our fiscal deficit was higher, current account deficit was higher. None of this is true, as we found out in the next few months, that this didn't happen. But let me just say, for an economy X, if it tries to fight depreciation, then that correction in prices that would have happened doesn't happen. So, then you have a large current account deficit, you keep on importing more because or you don't get the correction that you would have got if you allow the currency to be what corrects the current account balance. So you want your exports to be cheaper, yes, but what also happens is that people start borrowing more. If you get more capital inflows in certain situations, and it becomes a self-fulfilling prophecy. So in general, trying to push a currency away from where its fundamentals are taking it is a difficult path.
Mm-hmm. Tarush has a second question, and this is a question we've all been wondering and pondering and trying to answer, is about income taxes. Will removing personal income tax for this particular financial year help boost demand? Or can we at least have a flat income tax? Although I don't know what he means by flat income tax.
Look, nobody is going to remove income taxes.
it's, it's a fantasy.
Yeah, it's a fantasy. The government is already not got enough revenues. They don't want to, borrow more. They've already announced the second half borrowing calendar, and it certainly gives no indication that income taxes are going to be removed and they're going to borrow that additional amount.
Mm-hmm.
The other question is about flat income taxes. Now, very rarely do you get flat income taxes. Mostly in democracies, every party has to win elections, and the number of voters, the poorer voters, are always more than the richer voters.
Mm-hmm.
And it's always politically beneficial to tax the rich more. There are reports and reports on inequality and how unequal incomes are across the population, and the bulk of the population is very, very poor. So it's a fantasy. I'm not taking a stance on whether it is good or bad, or whether you should have progressive taxes or regressive taxes, or in fact, in my opinion, maybe no income taxes at all, and what one should have is a consumption tax, so that if you consume more, you pay more, and your savings don't get taxed. And that would encourage savings. But I'm not going to go into that debate. I'm just saying, first of all, it's a flat tax is very unlikely to happen in a democracy, in India in particular, where we have a very sort of bent of mind, and we like to say, oh, the rich should be taxed more. And second, if you have any fantasies about income tax being removed this year, okay.
Unless you migrate to one of those petrodollar rich Middle Eastern countries and get a tax-free salary.
Yeah, certainly not in India.
Yeah. I hope that answers your question, Tarush. Thanks for your questions, and I hope you keep watching our videos regularly. The next question, Ela, is from Samarth. Samarth is asking us that contraction of the GDP by 9.5% is what the governor forecast, is now in black and white from the RBI side. So what shape of recovery can we expect? Because a V shape now seems to be out of the window.
Yeah, so let's just start with the problem. The problem is not the economy. The first problem that we're facing is still COVID. We are still not getting back to work, and we're still not getting back to going out and moving and interacting the way we were, because the virus is still around. Had that not happened, one could have discussed a V-shaped recovery. But given the fact that that's not the case, given the fact that you're still in, you're still discussing when will we get a vaccine, what percentage of people do we need to vaccinate, how will we do that, how will everybody go back to work, to schools, to colleges, to universities, travel, restaurants, construction, a lot of activities which are today very, very subdued because of the virus. I don't think it's realistic to talk about a V-shaped recovery. While the governor does mention a second wave and kind of thinks that 9.5 if there is no second wave. But we don't know, because schools and colleges are closed. And if we find that once we open them, we get, even the little slowdown that has started. We've seen that growth rate of COVID cases come down in India in the last few days, but we don't know if that will go back up. So I think realistically, there's far too much uncertainty. I mean, you can call it a U or a W or I don't know what shape of letters it will give us. But I really don't think that without the virus being in control, being under control, and after whatever, the whole world is seeing a second wave now. Many countries are, rather, I should say. Many countries are seeing the second wave now. Unless we know how this trajectory of the virus is going to play out, it's very unrealistic to predict the shape of the recovery.
I have a question of my own that just came up as I was listening to your answer. With everything being so unpredictable, does the shape of a recovery even matter in that sense? Because all these are things economists have come up, it should be V, W, K, L. Does the shape of a recovery matter, Ila?
But we're all sitting at home and we're all trying to, come up with clever ideas. So, well, I think if it's L-shaped, where you just see this very, very long period of the economy not recovering, then one would be concerned. One would be worried that, it's gone down and then like for years, nothing happens. I'm not that pessimistic. I don't think that's going to happen. I think that we are going to recover soon enough, but not making a lot of predictions, as I said, as long as there's so much uncertainty, not making predictions about, whether it will be a long U or whether it will be a W where things will go up and down. But yes, if it was an L and with a never-ending horizontal line, then that would worry me too. It would matter then.
Prashant Katiyar has a question. He says, do you think that with every passing day, the individual capacity of people to get out of this financial crisis is getting compromised? Shouldn't the government of India come out with a more substantial stimulus package?
You see, it is difficult. That with each passing day, it becomes more and more difficult. The longer we stay in recession, the more difficult it will be to get out. But I doubt that the government of India has a lot of capacity to come up with a package. What can the government do? The government can borrow and spend. The government can print notes, or the government can tax a little bit more. If, let's say, the government prints notes, maybe a couple of % of GDP is what they can manage to further give us a stimulus of. But we're all at inflation. There is always a risk. I did say right in the beginning that the inflation that we have is about 6.5, above the present, above the target, and above the band, and that it is mainly due to supply side constraints. But if you say printing notes is the answer to getting higher borrowing and thus high growth, we may go very badly if we just assume that there's no limit to how much we can print. I mean, it could be a difficult, dangerous path to go down on. The second option would be to borrow. To borrow from whom? To borrow domestically. That reduces the amount of borrowing that the private sector can do when you're able to get the right terms from the bank. Or to borrow internationally. To borrow internationally, yes, there's a lot of global liquidity available. Does the government want to borrow? It might actually open floodgates, which might be very difficult to control because, till now we've got a pretty much prudent government. Last few years, we've seen them trying to stick to FRBM. We've seen them at least trying not to have a large balance of payment and a lot of borrowing abroad. Some small borrowing gets done through some SBIs, one kind of bond or another, or through NRIs. But we've never opened the floodgates to foreign borrowing. I think that's kept us safe. It's a cautious strategy, but it's kept us safe. So the question of stimulus should not be delinked from the macro question of where will the money come from. And when you think about the stimulus, I think that it's just not, the choices are not easy. So I doubt that there will be a very big stimulus. I mean, of course, the government can do a couple of percentage more, but I doubt that there will be some like 10, 20% that people often talk about.
A related question from Madhav Bapat. He says, because of all the predictions that have been made and the fact that the governor said we could have a positive growth rate in the fourth quarter, can we say the government's incentive package is working? The government announced a lot of steps in May. The finance minister had a series of 5 press conferences.
I think the biggest thing that is working is the unlocking. I mean, why did we get the sharp contraction? Because we said nothing can move, nobody can go out, nobody can produce anything, nobody can consume anything. So the biggest factor, the bulk of the economy is dependent on people like us, all of us stepping out, doing something for somebody else. And that's what creates GDP. That's what gives us growth. And that's the biggest factor. When you're prevented from doing that, whether it's for a period of 3 weeks or 6 weeks or 3 months, obviously GDP will go down. So I don't think the package itself was expected to have very short-term effects. I mean, look at the farm laws. They are for the long run. And as the government has also said, that it is not something that's going to create a market for farm produce tomorrow. It's going to work in the long run. So yes, there were some immediate relief packages, and we'll wait and see how effective they have been. But I think the biggest factor that is working is the unlocking with adequate safety measures. So it's not as if millions are dying every day, but unlocking has been done so that we can resume economic activity.
Siddharth Jain and Avinash Kumar, 2 questions. I will club both those questions, Ila. Siddharth Jain asks, do you expect double-digit growth next year as Q1 and Q2 in next year, that is the next financial year, will have a very, very low base effect? And Avinash Kumar is asking, is a $5 trillion economy possible now?
Look, of course, there's a low base effect. And so if all I'm going to look at is quarter-on-quarter annual growth, then yes, definitely growth will be better. I mean, there is absolutely no question that if I look at growth rates, I think in the present environment, what you should think about is not the growth rate, but about the level of GDP. And the question that should be asked, and in fact, if you look at the monetary policy statement today, the governor does say that GDP will come back to its previous level in the fourth quarter. So the question everyone is addressing, the measure that we have in our minds is, when does GDP come back to the level at which it was? So I think this question about growth rate is, I mean, of course we'll have high growth rates. The
Five
second,
$5 trillion economy.
look, the crisis that you had was completely unprecedented. I mean, I don't think any of us could ever imagine that the whole world will be in the kind of lockdown that it is. I mean, at least for me, it was completely beyond my imagination.
Mhm.
I think that it's constituted a shock whose effects are very difficult to understand.
Mhm.
And so before saying that, oh, we had set a goal 10 years ago for something, and now, despite everything that's happened, are we going to reach that goal? I think we need to do rethinking on what the goals should be, and they should be more realistic.
Mhm.
Sometimes aspirations are, and the $5 trillion economy was an aspiration, and a very good aspiration. I mean, one should aspire to grow faster and to grow bigger and to be, an important, large economy in the world. But if we try to pick that as a number and say that, oh, now that we won't reach that number, so there is failure, I don't think that would be the right measure, because your priority at this time was how to cope with the virus, how to save lives, how to not have many deaths. So you took a number of steps which will make you move away from that objective of X amount by X years. But I don't think that that's something that we should be judging ourselves about. When we fall ill and we miss one target, that's fine. We go back and try to recover. We don't just deride ourselves that we fail there.
Mhm. I would just like to tell our viewers, Sheila, that we're getting lots and lots of questions, and we will try to take as many of them as possible. So please bear with us. We will try and answer as much as time allows us, and Ela has the time for us. The next one, Ela, is from Parimal A. And this is something we have addressed in a previous episode, so I'm sure you can just repeat that. Should the government change the inflation target when it reviews it next year?
So I don't think it should. No, I think that our experience for these 4 years, where we've had a 4% target, is that one, it has been a very important number in people's minds.
Mhm.
So I've noticed, for example, that when now contracts are getting written, people put a number of a 5% annual increase rather than the 10% annual increase that used to happen. And
Mhm.
I think people are getting used to this number of, while the number is 4, there is a band around it. If had we not had COVID, had this whole episode not have happened, I would have said that the time is when it comes up for review in 2021, then we should maybe tighten the band a little. So make it say 3 to 5 instead of from 2 to 6,
Mhm.
because presently it's 4 plus minus 2.
Yeah.
So I would have argued to make it a little tighter, maybe zero point 0.5 on either side, or 1 on each side. But given the fact that we are in these unprecedented times, maybe that also we should just think about and see whether we want to do it. Next year is the time when the target would need to be reviewed. So let's talk about this again next year and see where we are.
Mhm. It's another question on interest rates, but this is a question about interest rates in the informal sector. Vinod Y has asked us on YouTube, does the RBI know what money lenders charge?
Well, I am not privy to what the RBI knows or doesn't know.
Hmm.
Uh, I think the issue that you're referring to, and let's talk about that, is that the bulk of small enterprises in India do not have access to formal credit. So when you're in the formal banking sector, and you have a bank that's borrowing at the repo rate and lending at, whether it's the bank rate plus something, or a weighted market interest rate, and then that plus a premium on that, then you are part of the formal sector, and you're part of those firms who are able to borrow from the banking sector. The large mass of firms, in fact, more than, I think, 90% of small firms are not able to borrow from the banking sector. what if the interest rates that are there in the formal sector need to be the rates that are in the informal sector. There need to be regulatory changes. There need to be a lot more banks and lenders who are part of the formal sector. So, you give out more licenses, or maybe to local banks, maybe to commercial banks. You figure out how to make them not, have this clubby behavior. Certainly all the PSBs, for example, more or less lend at the same rates. You also figure out how to change the terms at which they lend, because collateralized lending is what's really mostly what India does is, or the Indian financial sector and these banks do, is collateralized lending. They don't take the risk of doing uncollateralized lending, which is what the informal sector pretty much does. So the rates of interest of about whatever, 25%, 30%, 35% that you find in the informal sector are often uncollateralized lending. What you need is a transformation of the entire financial sector for that. What has been done so far has really been that we reach out to all depositors in the country. So, you have a Jan Dhan scheme which reaches out to all depositors. But what you don't have yet is a way to reach out to all creditors, for which you need far more deep-seated changes in the financial sector. I've written about this in the previous column also, in a number of columns, that how financial inclusion in terms of reaching out to borrowers, small industries, small producers all across the economy is where we should take steps, why we need reform in the financial sector, and that's where we need to
go. Again, some questions related to income tax and giving more money in the hands of people. One is Mayank Jha is asking us, is it possible to achieve demand growth if income tax is reduced for a few quarters? We talked about this earlier. Hitesh Mirchandani says, why can't the government increase FD rates, that is fixed deposit rates, by giving more cash in hand for the middle class?
The Provident Fund rate, the EPFO rate, which is where the government is borrowing from you, which is a fixed deposit rate, is actually much higher. But if you expect the banking sector to give higher, that's not the government giving. So that's are you saying that banks should give higher rates? Well, FD rates of banks vary according to interest rates in the economy. And then when we are asking for a monetary stimulus, when we are saying interest rates should be cut, then interest rates and government, and the RBI pumps liquidity into the system, then what is really happening is that lower rates, interest rates come down all across. So whether it is for borrowers, we want them to come down for those who borrow, then they naturally come down for those who also receive interest, because you can't have a system where I'll borrow at less, but the bank, which is just an intermediary, pays more to the one the bank borrows from. So I think, let's be clear, this is not the government giving, if FDs are not something that, interest is not something that the government pays, except in the case of, say, small savings or Provident Fund, where actually the rates are much higher. So the government does do that, and there are no banks as intermediaries. But in the banking sector, you do have rates moving together, that if the rates come down for those who borrow, then the rates also come down for those who deposit money. And that, you can't really have a system where that's not the case, because who's going to, again, who's going to bear the cost of that?
We have time for one last question, Neela. We've already overshot our limit. Akhil Kumar Sankla is asking us, will the labor law changes have any positive impact on the economy?
You see, it is hoped that whenever labor law changes are discussed, whenever labor law is discussed in India, then there are a lot of issues there about safety and this and that and the other. But the basic issue, the primary issue where there is huge disagreement is should you be able to fire, and whether the ability to fire is going to increase hiring. That's really the question.
Mm-hmm.
Now, the question you should suppose you were to address this question to your local local banya, the local chowpala,
Mm-hmm.
and you were to ask him that you have to pay provident fund and you have to treat you use your hire your employee in such and such a way, but you have there are two possible scenarios: one where you can never fire him, and the other way you can fire. It is expected, and that's what all this controversy has been about. It is expected that if you say that you cannot fire a person, then the employer will be reluctant to hire. And that's the basis of why we discuss these labor laws, that the uh, ability to fire will actually increase the hiring that happens, which it will increase employment. People who are currently completely hired in an informal way, who are not getting their provident fund, who are not working in safe environments, who are treated as almost outs in that informal labor force, are being done so because were you to get all of that, then along with that goes the fact that you can't fire people. So that's really the essence. And there should be better safety, there should be better conditions. But if we are able to get laws where maybe because you're doing fixed term contracts, as has been proposed, you do get an increase in employment because you feel confident that okay, if times are bad or if this person doesn't perform, then I can fire the person. Then that would give more flexibility to the employer, and we might get an increase in employment. That's
Thank you so much, Ela. I would like to wrap this special Ilanomics session with what we have found in the consumer confidence survey of the RBI, which is also part of the report today. The consumer confidence survey says Indians have never been more pessimistic when the survey was conducted. At the same time, they are relatively more confident now about the next 1 year. So that confidence and the hope about recovery is also creeping into the minds of consumers, which is obviously a good sign for the economy. Thank you, everyone, for watching this special live edition of Ilanomics. We will be back again next week with a regular edition, which will be recorded, and it will come with Ila's column next week, next Friday. Until then, please keep watching our other videos, subscribe to our YouTube channel, and thank you very much. Have a safe weekend and wash your hands.
okay.